Hi there, traders. This is Brad Goodwell with the FX Market Insight for the 7th of September. Right, as we come into Friday's trading, first Friday of the month, always non-farm payrolls or thereabouts. Now, it's one of those ones and there's not a huge amount of data coming through the Asian and even the European session, so the currencies should pretty much be on hold, I would think, running into this. Now, the Aussie dollar continues to bang away sideways, keeps threading the downside and possibly the top side for that matter, but just doesn't have any real momentum. We've got nothing from the central bank, no strong fundamentals to really give it direction either way. So I sort of banging around with the fortunes of the Chinese yuan. Now, Kiwi also a little bit of a relief rally following the, I guess that positive news out of Brexit the other day, but it is now trading sideways as well and nothing out of the RBNZ governor today. The big move to me, really, overnight has been dollar yen, which is finally starting to push down. Now, you'd expect this to happen if there was an escalation in trade tensions and all these sorts of things. So I'm not sure exactly what's going on. I haven't seen anything, but there are rumblings. There was, I think CNBC had a report during the North American session that apparently some journo was told that Trump was thinking about hitting up Japan next with some trade tariffs. So that may have been a catalyst for a stop-loss run, but hard to work out what's going on there. Euro still banging away sideways despite weak German industrial output numbers. Once again, no key European numbers out this week. And we're obviously waiting for the big heavy hitter, the US non-farm payrolls, to give us some direction, but that's where it's waiting. Now, look at sterling. No one really wants to touch this sort of poison chalice. We had that big move following, it seems to be varying articles about this, whether the EU and the UK are happy to work out a deal with less stringent attachments. The Germans didn't seem to be too enthused by that, but it's very hard to work out. There hasn't been any follow-up articles about what is really going on with Brexit. So at this stage, sterling starting to just trade sideways, awaiting something. And if you want a shot in the arm, the US non-farm payrolls will definitely do that. Now, dollar CAD still sort of cruising to the top side. We haven't seen anything out of NAFTA, but we did see the trend line breached, the short-term hourly support trend line, on the back of Bank of Canada have come out and said, look, if there's nothing out of NAFTA, we may have to raise rates. Okay, their inflation's at 3%. Their inflation band is between 1% and 2%, so they've got to raise rates regardless. But they are waiting for NAFTA. Nothing has actually come out yet. So Canada, Trudeau, whoever else is in charge up there are holding out. So dollar CAD still, to me, has a lot more room to go on the downside. But we really have to wait for NAFTA to work that out. Now, coming over, check out the two, what I've been calling the two big dogs in the yard, who are sort of biting each other. The US dollar index continues to sort of just grind sideways for me. The interesting one as well is dollar yuan, right? The Chinese renminbi or yuan, depends on how long you've been trading for. But it is trading sideways now. At the start of, just be aware, at the start of the European session, we are starting to see this thing move in one direction. And then it impacts all the majors, and it just turns around and just gyrates sideways. So just as you go into that European North American session, just keep an eye on this. It is the raw nerve, okay? If there's increase in tariffs, you'll see the yuan fall, which is dollar yuan sort of rallying. So just make sure you understand what's going on there. But it is just trading sideways at this point. Now, if I just come over here, just give you a bit of a brief look at the, what's going around the news. The only significant thing here, there's Trump, articles, whatever it is. He's bad press wherever he goes. The one fundamental thing here that was of significance to me is the Bank of Canada, right? They have highlighted that they need to raise rates, right? The market is factoring in a rate hike in October. I think as early as October, and that's where we are. Now, the rest of everything else here is pretty much geopolitical, okay? There's just rumours. Some journal or columnist was said to have been told by Trump he may sort of have a throw at Japan. That's just crazy stuff. But you can see how the market's running with it. We've got Brexit here in impacting the sterling. The IMF have got their hands full with all the emerging currencies, Argentinian peso, the Turkish lira, they're all over the shop. And then you've got the situation still rumbling around with oil, which is obviously very important for Canada. So the Bank of Canada and the Canadian dollar, really the only positive as will sort of move that makes sense. Now, if I just come back, just to have a look, just where all these geopolitical events sort of come to. If you have a look here, I'll just highlight the Aussie dollar. And this is a classic case of what geopolitical events do for the currency. Now, if I just get rid of that one at the top. Whoop. I was just going to say, let me just get rid of that line. Okay, so this trend line down the bottom here, right, if you come back to the daily charts, we're getting really encouraged here on the Aussie in particular because it was coming up to this massive support line, and it comes back to 2001. Now, you can see where that Aussie has just been coming, it's around 71.94. If I come into the hourly charts, okay, and then just highlight this, now you can start to see what geopolitical events do to the currency pair. Now, this should be if we had key fundamental driver like from the central bank, the Aussie would be much lower, all right? What we have got is not much and just geopolitical events. And this seesaw choppy action has been burning traders all over the place. They're like getting short under the old line, long above it. It's just chaotic. And this is a very good example of what geopolitical events do to the major currency pairs. If anything, you're better off coming back to looking at the longer term picture, and it gives you a better idea of what's going on. Now, this is your general roadmap. So you get the Aussie dollar here. Yeah, it's going down, but you can see like the barroom brawl here on the daily charts is very ugly. The Kiwi still modestly going down. I've got this trend line here. So Euro was going down. Now it's just trading sideways, and sterling sort of starting to get the same sort of picture. All right, and dollar CAD, as you can see, in the longer term, it's still just banging away sideways in a pretty big range. And dollar yen still in that nice little uptrend. So there's been no major shifts. Don't get caught up in all the noise, right? If you're like you trade, and when I sort of tell you about what the bankers do, when we're looking at the charts, they trade off the hourly charts. This is where they're making their trading decisions. But the overall trends come from the bigger charts. So don't just get caught up in the noise of short-term moves and try and jump on the next big move, because they aren't happening at the moment. And that's because of these geopolitical events. All right, now as we come into today's trading, it's important to focus on what's going on in the market at the moment. So if you come down to the MyFX Trading Hub, still, and it's probably been 2 weeks now at least, where these geopolitical events have been dominating a lot of the moves. Okay, so just be aware that the market, it's moving with the data. Don't get me wrong, and the price action isn't too bad, but the randomness of those events is stalling a lot of the major currency pairs. Okay, at the moment, we've got Aussie. Let me just come down to the daily analysis. We've got Aussie, Kiwi, and the Swissy has turned, to me, bearish again on a technical perspective. The Kiwi, the best fundamental technical trade. The Aussie's also bearish, more on a technical perspective than overall fundamentals. And the rest of these majors, don't get confused. To me, they are just trading sideways. All right. Now, as we come back up to look at the where the main action is today, well, it's no surprise that the markets will probably be on hold through the Asian session. Just keep an eye on the one. The US non-farm payrolls, probably the most aggressive number. Now, the Fed interest rate meeting is the biggest event. Now, outside of that, the non-farm payrolls is just a menace. There's three variables: average earnings, the unemployment rate, and the non-farm payrolls themselves. So just be aware, it's not an easy trade. If all three variables line up, either strong or weak, well, then you can get a move. But don't forget, there's a huge amount of geopolitical crap going on at the moment, and I expect that to extend into the weekend, especially NAFTA. Now, unfortunately, we have Canadian employment numbers at the same time, so it's very hard to be trading dollar CAD when you've got the US non-farms hitting all the major pairs, and then you've got NAFTA, you've got oil, and then you've got the Bank of CAD, and then employment numbers on the CAD to work out where that trade is. So dollar CAD may be a little bit too tricky at this point. Now, just also, it's sort of tentatively booked in at the moment. Now, like the Chinese economic data from here will be very important as these tariffs start to impact. Now, it's probably still a little bit early for that, but the trade balance numbers, they are due for release sometime over the next couple of days, probably on the weekend. So just be aware, they could pop out later today in Asia, or it's probably going to be on Saturday. So this is one of the major reasons why China isn't a major currency for that matter, because their data is random. No one believes the releases, and they're doing their own thing. Anyway, that's where we are at the moment, guys. So lots of opportunity across the board. Just be aware that the employment numbers out of the US are going to be the major hitting data. And we've got a huge week next week. So start to scroll down through the data there. You'll find that next week is by far and away the biggest in a long time for economic numbers. So hopefully we get a lot of these geopolitical issues mapped out. All right, guys, that's it from me. It's Friday. We've got some good technical levels. Just keep an eye on your charts. Don't get overexcited about big long-term moves. These are not central bank announcements. These are geopolitical events, and they are short-term thrusts, either up or down. So there's cash in the market, but just be aware. Don't fall in love with your positions. If you get a good bit of cash in your account, just take the cash and reload. All right, guys, we'll catch you later on, and all the very best. I was just going to finish up with, don't forget, as you're coming out of North American session, there are a number of, European session, there are a number of releases to check out. You get the revised GDP numbers. Now, these are usually on the money, but it's worth having a look at all the same. All right, and that's where we come down to the big ones, down the bottom there. So pretty much should be a pretty quiet session in Asia. If anything, watch dollar yuan for movements. Once again, if I just come back to finish up with the on the main page there, you'll see here too the equity markets, once again, pretty neutral. This is a sign that the market is unsure of what's going on, or they're not fussed with what's happening at the moment. I think that's because they're becoming desensitized to all these continuous geopolitical events. So we're not going to get much of a lead out of the equity markets. It's really out of dollar China and the dollar index, especially with the non-farm payrolls. All right, guys, that's it from me. Have a good trade day. Have a good weekend. I'll see you in the trade zone. Cheerio.